Welcome to the Trading Market Technicals morning call video for Monday, February the 10th. I did get a little bit of an additional move to the upside on Friday. Dow Jones up 165, Nasdaq up 68, S&P up 23, and the Russell up about 12 and a half points. Now this is due to non-farm payroll numbers that came out. So now it's the markets are just crazy the way things have been happening in the last few weeks. We had a weaker job report come out on Friday, and markets actually rallied. So it looks like now bad news is good news for the market again, when at one point was bad news and good news was good news. I know it sounds silly, but believe it or not, that's how the markets have interpreted Friday's price action. And just to let you guys know that volume did confirm a good move to the upside. So we had better volume on Friday's move higher than Thursday's move higher. So we still have to be a little cautious here. I still think that the market has a lot of proving to do before we look to really start buying, adding to positions and holding some longer term swing trades. I think personally that the next few days is really going to be telling on what the market has in mind, and if the market wants to continue to move lower. Because right now we're just actually rallying into certain key areas of resistance, which to me will probably present a shorting opportunity. Excuse me, and we'll get that in a moment as we follow up with the chart segment. But let's just want to show you the VIX here. I mentioned every time we get out of this Bollinger Band, we get a close on the inside, would be a great opportunity. Even if you don't trade volatility to VIX, this would give a buy indication to the market. And sure enough, look what happened. Volatility just literally collapsed in 3 days. So great little indicator. You must follow the VIX, guys. If you're not, you really should be doing. There's a couple of other key indicators that I've showed you in the past that you should be following, and bunch them up together. Now, I wanted to show you what the emerging markets are doing. So we did get a little bit of reprieve on what the EEM, the ETF, the emerging market ETF is doing. But what really is going on here is just we have bearish symmetry. We just got a death cross the 50 and the 200. We're below the 200, and of course we're above the 8. But to me, this is not. This still looks pretty ugly. Even if it rallied back into resistance here, I think that the markets are probably setting up for one more big flush before the spring starts, and that's where we come into a little seasonal strength going into the spring and, of course, the beginning of the summer months. Okay, what's interesting, the banks actually, the BKX, and I mentioned that I do like the banks and the builders, and as you can see here, we've gotten back above the horizontal trend line support, which is now resistance, now support again. We are below the 50 and the 20, so I'd like to see this get back above, chop around for a few days, create some sort of a base like this, and then start to move higher again and challenge those highs. So I do like the banks. I'll show you a couple of banks in the chart segment, but interesting developments. And I like dialing down through all the ETFs and see what's moving, what's good, and see what's happening here for possible some trade setups. Now, gold. Well, before I do that, let me show you the XLF with the bullish percent. Now, the XLF is another ETF, obviously, for the banks and financials, but the bullish percent hasn't really given us a buy signal as of yet. That's fine. We just still need to kind of chop around. Maybe we roll back over again here and create that right shoulder. So right now we have the left shoulder, right? We have the head, and we still have to create that right shoulder to make that inverted head and shoulders. That's fine. If that happens, then let's see what happens in a few days. Maybe we get a couple of some moves back down, up, and then all of a sudden break back higher. So the only time will tell, but I think that's what we're looking to set up here, some sort of a bullish inverted head and shoulders pattern here. Again, I'd like to see this start to move back up to the upside. And let's take a look at the USO since we're speaking of that. Now, it has given us a buy signal because we had crossed higher, and we took out the sideways consolidation. So oil actually really exploded on Friday. And it's down in the pre-market now as I'm recording. It's down about 41 cents, but still it has been a little bit more volatile in the as of late before. Now we're looking for crude oil to actually, I'm looking for a continued move up to at least maybe the 102, 104 area. This is the USO, but I'll show you crude right here. And as you can see here, we took out that 200-day moving average. It's very bullish for crude. Now we have a nice big engulfing candle here, which If it even came back in a little bit and held about 38% or even touched that 200-day moving average, I still think there's nothing wrong with crude. If anything, you don't want to be chasing it. Look for a pullback. Look for another higher low from the previous low. Easy to manage, guys. I'd like to see the 20 cross over that 50 as well as momentum starts to pick up again. As you can see here, the momentum indicators are pointing higher. So still looking pretty good, looking constructive here. I do like that. All right, now let's go into the chart segment. Excuse me. Here's the yen, and as you can see here, yen is still strong. Now, we have a bull flag. We still have higher highs and higher lows. All of our moving averages are pointing higher. So this is what I'm nervous about as far as the market starting to move higher. Now, of course, we're going to have some retracement rallies and markets coming in at one point. Nothing goes straight up or straight down. But this is here a concern. I'd like to see the yen continued some weakness and really get back below these averages. Now we do have a Fibonacci cluster just right above. We have an extension. We have a bunch of extensions here and a retracement, which is coming in right around these areas. So a break above this 990, 991. That's going to really hurt equities. And if that happens, and then we clear this, then the next logical spot will be the 61.8% retracement and or the 200-day moving average. So I'm watching this closely, and if we get continued strength in the yen, look for some weakness coming back into equities. Okay, really important here to watch, guys. All right, now here's a daily chart of the ES, and as you can see here, nice volume. We confirmed that on Friday, so a nice move up. We're down about $4, right? $3.75 in the pre-market session. But again, we did clear this little area, which is important, and now we really need to clear this guy right around here, 1800. I like that, and I move right up to that 1820-ish area, and I'll show that to you in an hourly chart. As you can see here, we get right back into this area. It's going to be a heavy area resistance. So we have a horizontal trend line. We have a 38% fib retracement, and then we have a bunch of extensions here. So if we can clear this area here at 1800, then I think the next spot's going to be right around here, the 1812. I call it 1815 to 1820, and that would be a pretty decent shorting opportunity, I think. And I'll show you that to you in another hourly chart. Right up in this area here, 1820-ish would be a great little spot, and you could see that have a little bit of some little area of resistance here. This is the spot I'm going to look at. Now, am I going to short while price is up there? No, of course not. I'm going to wait for a reversal candle taking out the previous day's low, and then of course I want my moving average crossover, and then that's when I'm going to be looking to short any type of rallies if that were to trigger. Okay, now we can clearly just break above the 1820 and continue to move higher. So that's why I'm watching to see what happens. As of right now, in a technical form, I will be looking for some continued strength this morning. Now, we are down a little bit, but if we can get some continued some follow-through, I think the retracement rally has a little bit more legs up into that 1815, 1820 area, and then, of course, we would reevaluate. Here's the spiders and GLD and the TLT. Nice little chart overlay on the top three. As you can see here, we're just basically retracing back up into this area of resistance. Now, what's interesting is that gold is up 10 now, and this is the GLD, so you're not going to show that data, but it is now above this trend line area. So this is going to be interesting developments in the next couple of days. TLT actually started to push back again. That's good. As bonds are moving lower, money's flowing back into equities, as you can see here. So just a quick synopsis of what's happening. You could easily see that on the three charts. And here is the weekly spot of spiders. Nice big hammer candle. We held that resistance, support, this uptrend line, higher highs, higher lows. This is perfect, is exactly what you want to see. And then now we're unwinding this overbought reading, guys. So this is something that we're going to continue to watch here, which is a good sign because you can't just constantly be running up with the markets without at least a decent pullback and some sort of a break here. So looking good. So far so good on the S&P 500. Now the daily picture obviously shows a little bit of a different story, but we actually had a nice 3-day rally, and we just basically back up into this area. Remember, the 50. We really need to clear the 50-day moving average. If we can get back above it on a closing basis, then I think that we have some further legs to at least challenge the highs here. Okay, but again, look at the volume. Volume actually confirmed that move on Friday. So definitely bullish, no question about it. Now, the transports is a concern to me because the transports didn't really do much, and this is our leader here. Now, it needs to get back above the 20-day moving average, just a little area, this little cluster area of this horizontal channel here. If we can get back above it on some volume, then I think that the transports would actually help move this market higher. Now, Russell's a concern. Okay, as you can see, we had diminishing volume on the way up, which is definitely a concern. And all it is bear flagging, another bear flag into this this little area here. Let me just grab that right there. As you can see, this is the 2012 lows, and all we're doing is just really back testing it. So this is definitely a concern. It's another one of our leaders, and it needs to lead. So let's see what happens. But if we have some of our leaders showing some weakness, the upside will be very limited. Here are the Qs. Okay, it did well, obviously, because we had Apple. Apple did well as well on Friday. And as you can see here, so we did have a good strength with volume in the Q. So not bad at all. But we need the other leaders to follow. We need the transports, and we definitely need the Russell to start picking up momentum to the upside. Diamonds held the 200 again from the October 9th low, as you can see. Now it is back above the horizontal area of support, which was resistance, and now we just need to like kind of chug along here, create some sort of another base up higher so we can get back above that 50-day moving average. But as you can see, Diamonds really took it on the chin, so it has a lot of work to do before we get really excited here. All right, here's the GLD. Go right into down the charts. Now, GLD will probably open up above this line, and that's going to be one day above it, so that's bullish, and it hasn't happened in pretty much all of December and in obviously all of October, all of 2014. So if this does break above it, I think you're going to have an easy shot to the 200-day moving average in the GLD, which is the gold ETFs. Now, the oil and gas, just kind of chugging along here at the lower end of the range, so really no trade. But again, follow the ETF, dial it down to the top 10 holdings, and then pick the best chart, and that's how you're going to get some really good movements in that ETF that you can participate in. Here's the XLE. Again, bearish symmetry, right? We're below the 50 to 20, and of course we're above the 8, but we're above the 200. We were below that. But to me, in the short term, if you wanted to short this bearish pattern, this bearish rising wedge, you can do so. I think on the longer term picture, I think the XLE in the ETF, the stocks in there are going to move higher again. So I'm going to step aside from shorting it, but I do think that it is ready for another move in the coming days and weeks. Here's the USO, as you can see, really nice. This is what I liked. I really enjoy looking at when you get this sideways movement right here and really not doing much of anything, and we start to unwind that overbought reading, and then we have this explosive move to the upside. This will definitely, I think, will in the coming days and weeks will be higher, anywhere into the 37.5, possibly even the 38. Okay, but crude oil has been a little bit volatile, so you really have to position size yourself accordingly on this move because of the volatility that's happening. Home construction holding up relatively well. Now it's up the upper end of the range, looking for a possible breakout here. XHB, nice breakout in the XHB from this downtrend channel. So the home builders, I think, are back in play. I just like to see a little bit of a pullback to me. One more pullback, one more higher low. If Lennar can sell back into this 39, 90, 40, fill that gap and then move higher, I would look to buy Lennar here. I do like Lennar. Lennar is one of the strongest. Pulte here doing well, sitting above the 20 and consolidating again. You can see that. Hit that nice consolidation. You know, a take of the 2030 could get us to some real decent upside movement. And you can see it's got plenty of move to the upside. And once it breaks this area here, you can see the volume profiles. The volume profiles are really, really light on the way up, which means that you can literally have a big push to the upside with no resistance at all. Okay, so watch that Pulte. I do like Pulte. KBH as well. Real nice base building here, as you can see. Pretty much all of the back half of 2013, we've been building a big base, and now we're starting to break above that base. So watch it. We're still going to really need to clear this area. And let me just put the horizontal trend line here. That's going to really be the area to clear. I like that little spot. Break back above it again. volume profiles, real easy to manage here, as you can see, really light on the way up, so you could get a nice push to the upside with very little resistance. And XLF, we just showed that to you earlier. Here's that 2012 low. Let me just get that right back on that candle. So again, needs a lot of work, right? We got the 20 to 50, we got the uptrend channel, but again, constructive. Now, if we can get back above it, build a little bit of a base again above this horizontal support, and then really start to break higher, I think you're going to see some of these banks move as well. Look at this. Look at Citibank, as you can see. Big explosive 3-day move to the upside. We're barely above the 200 though, but now it needs to kind of base a little bit. I wouldn't be chasing this here. Let it fall back in. Let it make a higher low. Easy to manage. Your stops would be below this pivotal low here. If it were to build some sort of a base. But I do like Citibank. I like JP Morgan. Here's JP Morgan next. As you can see, back above the 50. So it is above the 200 and above the 50. So the we have better bullish symmetry than we do with Citibank, at least at the moment. If you really need to buy a bank, JP Morgan looks pretty good. And of course, Goldman needs a lot more work. I like to see it get back above the 200, and of course, I want to see it clear 166 right up in this area. And then we'd have to, obviously, our next hurdle would be the 50-day moving average. And then, of course, Apple. Okay, guys. So let's see what happens. Let's see what brings the week here. If we got a good non-farm payroll report, or at least a positive response, I should say. As you know, the report was weaker than expected, but now it looks like bad news is good news again. It's just literally crazy, just following what's happened minute by minute. But take a step back. Look for the best trade setups, manage your position size, and of course your stops, and you'll do fine riding out this volatility. Like I mentioned before, there's going to be a lot of good volatility, a lot of bad volatility, but there's a lot of opportunity out there. And if you just manage it accordingly to your trading plan, you're going to be very successful in this marketplace. So let's see what happens today. I'm looking for a little bit of strength here. Once we get into that 1820, I'm going to start looking for some sort of a trigger to look to short the market. Now, if it doesn't happen, then we will look to continue to buy pullbacks in some real strong stocks that sold off on sympathy with the market. Okay? Have a great day, and I'll speak to you tomorrow. Take care, everybody.